Hello everybody, it's December 23rd, 2022. Merry Christmas Eve today. So on Monday, we were right about here, 16,550. This is the candle I was doing this last video on. And what I said was that we had seen a completed 5 waves down, and so we're going to see a bit of a bounce up to the 17 to 17.6 region. You can see the high that we struck later this week was about 17,070, give or take. And I'll go over the action that we've seen since then. I do think we've got a bit higher to go. But this is an opportunity to add shorts. I was already short from 18,250, and I was going to add more in that 17 to 17.6 region. So playing out beautifully for now. And you know, the bullish scenario remains very, very unlikely at this point. You know, I can't rule it out as an alternate just in case something happens, but I really don't think it's going to develop into anything bullish from here. But going above 18,150 would at least take away the immediate bearish scenario that I'm seeing. All right, so let's jump in here. Just reviewing from this high right here where I shorted and had my 18,250 average short. We saw 1, 2, 3, 4, 5 down, hit the ideal location for that. So I do think we've got 5 down. I was then looking, again, the video is right about here. I was looking for an ABC up. This does not look like an ABC, it looks like an A. So from that perspective on Tuesday, I said, okay, I'm going to go ahead and assume that that's my A wave right there, and we're going to see a pullback then into this B wave zone. And you can see it hit the bottom of that B wave zone pretty much perfectly. We had a little ABC down for that B wave. Absolutely beautiful. So I actually went ahead and longed there, to be honest. I grabbed a little short here in that 17K region, but I flipped to a long just for a scalp here because I do expect us to go higher. So I flipped long, averages I think 16,650 on that long, right in this area here. So I'm still just waiting on that to continue playing out. And we should be well into the C wave now up here. And this would be this C wave of a second wave, which is going right into the danger zone. Now C waves typically take the shape of 5 waves, and many times they actually do look impulsive. So at this point in time, I am saying we likely have first wave right here, second wave right here, and we should be on the way up in this wave 3 of C with an eventual target of right about that 1.0 extension, about 17,372. And we can get that if we do a fib extension here on this little micro 1-2. Let me make this color a little different so you can see. So this third wave, based on this 1 and this 2, I'm going to extend that third wave up to about there, and fourth wave is probably right about there, and fifth wave up. So somewhere in this region is really reasonable. 17,340 to 17,423 is the ideal target for the C wave of this second wave that we're forming before we head down much deeper. And then in the larger sense, I've got a fib drawn here for A and B, and the danger zone for that is 618 to 1236. You can see that's this red box here, which is overlaid on top of the red box that I originally put. You can see how well that overlaps. So a lot of confluence to see significant resistance in this zone. That 1.0 extension right about that is, you know, typically what you see. The C wave is kind of the ideal region to go, is that 1.0 of the A and the B. So looking really promising here to continue upwards a bit in all likelihood, because this doesn't look complete quite yet. So we likely see this continue upwards a bit, but then we should see that area right around 17.3 or so reject. Now it could extend upwards. It could extend, you know, especially if 3, this next move up, goes a little crazy high, then 5 could extend a little bit higher as well. Invalidation really remains above this level right here, 18,137. That's the 886 fib of the drop from here to the bottom. So that's pretty much where we are at right now. And I can do a fib extension. We don't have this C wave fully formed yet, but let's just go with that assumption that that's the top right there. Let's just use that 1.0 extension, in fact, and we can get a fib downwards to see where we're likely to head after this. All right, so assuming we get right there, 17,372, we would then, I'll show you the path downwards, we would then have 1, 2, 3 would head down to about 14.2, 4 gives us a little bounce up to about 15.3, and then a fifth wave down to about 13.5. Okay, and that's right in that region I've been looking for, 12 to 14K. So this projects us downwards really nicely into that area. Now it's always possible this third wave extends. We could see that come down a little bit, which means 4 and 5 would then come down further as well. But still, I think it's quite reasonable to assume that 12 to 14K area is going to end up being the bottom of something. I mean, I'm not exactly sure what it is. It is, to be perfectly honest, it's quite possible that this is actually the start of a larger bear market. However, if that's the case, this would be our first wave down. We would see a nice big fat second wave up in the larger sense, which can take us back up into the mid-20s or even 30K. Even if we're not going back into a bull market, we can see a significant rally because this should complete 5 waves down off of the high. And again, when you see 5 waves complete, you can pretty much expect a rebound of some sort. Kind of like when I saw these 5 waves complete, I expected a rebound, right? So pretty much the same thing in the larger sense. Once we see those 5 down into that 12 to 14 area complete, we can expect a pretty large rebound. Whether or not that turns into something more bullish remains to be seen. And I'm just, at this point, playing it by ear because the macro picture has gotten messy, unfortunately messy, with the break of 15.7. All right, I think that pretty much sums it up. So short term, up a little bit before heading down further to start off the new year, most likely. All right, that's what I'm looking at, and I will talk to you guys on Monday. Have a wonderful holiday. If you celebrate Christmas, Merry Christmas to you all. And I'll talk to you guys on Monday after the holiday. We'll see where we are then. All right, good night.